National house prices have continued to record strong results over November, although the rate of growth in most capital cities has eased marginally compared to the previous month's robust results. And that's what we discuss in today's Property Insider Chat with Dr. Andrew Wilson. And you'll find that the November results was the 10th consecutive rise in monthly house prices. Now, if you've been a regular subscriber to our weekly video chats or subscribed to my podcast, you know that earlier this year, Dr. Wilson forecast that the housing markets would change directions and house prices would rise. And that happened when many others were still forecasting property Armageddon. Now, if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. We're now almost at the end of the year, and it's unlikely that at the beginning of this year, many would have believed the resilience of our housing markets. Our property markets reset at the beginning of the year, and house prices have now risen for 10 months in a row. And that's despite the interest rate rises, high inflation, reduced borrowing capacity, and the media that's been keen to warn us of a housing market crash. Now, remember all those commentators who tried to scare us about mortgage stress, fixed rates mortgage cliff? There was even talk about a recession earlier this year by many people, wasn't there? Yet despite all the challenges thrown at them, property values in our combined capital cities have kept rising, albeit at a slower rate over the last month. So I'm keen to hear the latest My Housing Market statistics for the end of November from their chief economist, Dr. Andrew Wilson. Hi, Andrew.
Yes, good day, Michael. And we're just about at the end of the year, as you said. So we really know quite clearly how our housing markets have performed. And it was another strong month, really, even though we didn't see the same rate of growth over the 3 months to November versus the 3 months to October as we saw over the previous quarter versus that previous quarter's month. But it was still a strong result. We have national median house prices up by 0.7% over that quarter compared to the October quarter, which was just a little bit below the 0.9% that we reported over the October quarter versus the September quarter. And in fact, that growth rate, that 0.9%, was the fastest growth rate that we'd recorded since June. So the spring market is certainly living up to its publicity, its hype. It's been a strengthening market and still producing strong results, Michael. And as you said, we've now recorded 10 consecutive months of quarterly prices growth up to November. And of course, really, November's the last significant period of price activity that we will report until the end of the year. But nonetheless, another very strong result. And as you said, Michael, when we look at the national figures, 10 consecutive months of increases. And I think it's salient to say that we've now had median house prices up by 7.9% over this year so far, over the full year, 7.4%. And median national house prices, Michael, are 0.7% higher than their previous peak, which was recorded in April last year. So record national house prices currently. When we look at the capital city breakdowns over that November quarter, all capitals reported increases in median house prices, with the exception of Melbourne, where prices were steady. Hobart was the top performer, up by 2.9%. But of course, Hobart has been a little weaker earlier in the year, so a little bit of catch-up happening there with Hobart. Perth, again, a strong result, and that's been consistently strong, really, over the past 2 years, up by 1.9%. Over the month. Adelaide up 1.1%, Brisbane up 0.9%, Sydney up 0.7%, and Darwin and Canberra up marginally also over the month. And even though the trend for the monthly increases was a little bit lower than the previous month, nonetheless, prices growth has still been positive in most capital cities, well, all capital cities with the exception of Melbourne, which was flat. And when we do look at the annual growth figures, or certainly the year to date, Michael, figures for the capital cities, it really does tell the story. Sydney's now increased, its median house prices increased by 10.3% over the year so far, and that's compared to where it finished in December last year. Melbourne, the underperformer in the sense of the major capitals, up by 3.4%, but Brisbane up 9%, Adelaide up 10.3%, and Perth, Michael, median house prices have increased by 13.5%. so far this year. The underperformers have been Hobart, where prices are down by 2.7%. We mentioned that although there has been some weakening in Hobart median house prices, they have picked up over recent months. Darwin down just marginally by 1.8% over this year so far. And of course, no surprise that the full year picture is also strong. Perth up 14% over the past 12 months, Adelaide 11%, and Sydney up 9.3%. These are big numbers, Michael, and certainly fly in the face of what was really clownish predictions by many at the end of this year and into this year about the potential for a house price crash, which is just looking completely ludicrous now going forward. It's okay, I guess those sort of headlines are interesting to some degree, but those that make decisions based on house price crash nonsense really would be ruining it, given the growth in prices so far this year. And when we look at previous peak prices, still some discounting available compared to previous peak price. Sydney's just about back to its previous peak, down by 0.6%. And of course, that previous peak was in March last year, Michael. Melbourne's still some value there for Melbourne buyers, with Melbourne house prices still down by 3.4% compared to their previous peak. So still some discount available there in the Melbourne market. But Brisbane, Adelaide and Perth are now tracking at record high prices, with Perth now tracking 1.9% higher than its previous peak. The underperformers are the smaller markets in Hobart, Darwin and Canberra, which are all still some way off their previous peak prices. So really, Michael, some very positive results again. And we are starting to crystallise that annual growth rate, which are clearly going to be double-figure results in most of the capital cities this year, and particularly for Melbourne and Sydney, which suffered the most significant losses last year. They're going to recover most of those losses, particularly Sydney this year. And the other major capitals, Adelaide, Perth and Brisbane, are tracking well ahead of their previous peaks now, Michael.
Yes, they are. So again, Australia's housing markets are fragmented. There isn't one Australian housing market, as the media often report. And let's be blunt, there isn't a Sydney, Melbourne, Brisbane market either. So within those markets, they're fragmented. We know the upper end of the Sydney market started to pick up early in the year, and now more medium price houses are picking up in value too. So before anyone makes a big decision, the overall picture is important, but you've got to get more granular, and clearly apartments have performed differently to houses as well. I guess affordability has been an issue there, Andrew. So how have the apartment markets, the unit markets, performed over the year?
Well, after a flattish period to begin the spring market, Michael, capital city unit prices have since picked up, with the national market up by 0.4% over the November quarter compared to the October quarter median price. That's a little lower than the 1% reported over the previous month. So consolidation in some sense, but still positive. And when we put those together, 1.4% over the past 2 quarters of growth is very positive, particularly, as I said, that flat coming up off that flatter period that we had through July into August. The top performers over the month, again, Perth is leading the charge. A smaller unit market there in Perth, up by 1.5%. Brisbane continues to be a very strong unit market, Michael. And of course, it's a substantial unit market, given all the construction that's happened over the past decade for apartments in Brisbane. It was up by 1.1%. Sydney unit prices were flat over the quarter, Melbourne up 0.8%. When we look at this year so far, Sydney units have risen by 6%, Brisbane up 10.7%. So Brisbane's going to get double-figure growth in both houses and units for this year, for 2023. Adelaide up 12.7%, Perth up 10.1%. Again, Hobart and Darwin, the underperformers there in terms of growth so far this year. But when we look at annual growth, Brisbane and Adelaide leading the charge there with 12.1% increase in the median unit price over the past year. Sydney up 5%, Melbourne up 2.5%. Still some value there for units in Melbourne, where they're still 4.2% below their previous peak. Sydney just 0.6% below the previous peak unit price, which is similar to what's happening with houses there in that comparison. Adelaide, again, similar to Sydney, 0.6% below its previous peak, but Brisbane is 0.9% below its previous peak unit price. and Perth 1.5% higher. Hobart, Darwin and Canberra are still below the previous peak unit price. But look, units have performed, particularly the big unit markets have performed not quite as strong as houses, although certainly in Brisbane, Adelaide and Perth, that has been as strong. In fact, Brisbane units have outperformed houses over the past 12 months. So really no sign there, even though, as we said, the smaller markets are underperforming in a sense. Certainly the big markets have led the charge with very positive results this year so far. It covers the whole spectrum of property types. When we are aggregating it, as you said, we're not looking at granular market performance here, but there's no doubt the trend has been a positive for the housing market this year. Confidence has been restored in the market, but it has been, as we've really been discussing for quite some time, a market that did offer value opportunities to buyers. We saw the same thing happen in 2019, that buyers start to drift back into the market when there is that perception of value with prices below their previous cyclical peak. We've seen the same thing happen this year, and we're now back to, I guess, ground zero in a way, Michael, with prices now recovering to their point of their post-COVID peak, which was at the beginning of last year. And of course, that means we'll get steadier growth coming through next year, although I still think we'll get positive growth in our housing markets, notwithstanding what's happening with interest rates.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process. It's not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, there's lots of factors affecting our housing markets, including interest rates. But what you mentioned a moment ago, in my mind, is one of the big ones, buyer and seller confidence. Media's been trying to kick the guts out of the property market and buyer confidence. And however, buyer confidence returned before seller confidence. And that's one of the reasons there was not as many properties on the market and property values increased.
Yes.
And I think we've also recognised that while interest rates clearly do have an impact, Andrew, there's many other factors that affect property values and confidence, not just interest rates.
Well, that's right. I mean, obviously interest rates affect those with the mortgage and particularly those with the new mortgage. Such as first home buyers. But at the end of the day, we still have a rip-roaring economy. The Reserve Bank has admitted as much. Its failure to track accurately the performance of the economy in the face of higher interest rates has meant that it's had to revisit higher interest rates. But the point is our interest rates started to rise, yes, first time in 10 years back in May last year, but they started at zero, Michael. So you couldn't get much lower than that. Official interest rates are still below where they were at the previous tightening cycle, which was back in 2012. And our interest rates are also below many of our partners, US, Eurozone, so which is probably a bit of a lesson for the Reserve Bank to at least be looking at the international experience. And unfortunately, it means the foot was taken off the brake too soon. It's going to have to go back on again, but I don't think it's going to materially affect, at this stage anyway, housing market performance, because the offsets to all that are a rip-roaring, booming economy. We've just seen that wages growth over the September quarter has reached a new record high. So there's plenty of income there to support higher interest rates for those that are thinking of getting into the housing market. And of course, we have consistently the lowest unemployment in decades, just tracking around those mid 3%. High participation rates. We're still producing tens of thousands of new jobs every month. But a part of that, of course, is the migration surge. You know, these are unprecedented numbers of people coming into our country, not just permanents, but we're also seeing hundreds of thousands of temporary visas through students and tourists, and they've all got to find somewhere to live, Michael. And the offset to all this demand, of course, is the fact that we just don't have the supply to match our housing needs. And there's really no prospect of supply matching demand in the foreseeable future. And by that, I mean, years really, because we're so far behind the 8 ball. All that means is that puts upward pressure on prices. And as we can see in the rental market, which is a disaster for tenants going forward, rents continue to rise and there's really no sense of relief on offer in our rental market anytime soon.
Well, some of the property bears have been hibernating over winter, but it looks like they've come out of their caves and they're concerned. They're telling anyone in the media who wants to listen that property values are going to fall again next year because of affordability and rising interest rates. But I think what you've just pointed out is that there's a lot more involved. And we're not seeing the distressed sales, and the banks are reporting that the clients are keeping up their mortgages.
Well, how long do these people have to be, Michael? Cycle after cycle. In nearly 40 years, we've only had 4 years where prices have fallen in this country, national house prices, 4 years out of 40. And the worst was 5.5% in 2018. I mean, these negative comments are just clickbait. They really should be laughed at. And if the media had any credibility, they would ignore them going forward. But unfortunately, the media needs all those clicks it can get. And I think the real test of this, if the public out there just really start to ignore these types of comments, which I think essentially they were ignored as the year progressed this year.
Well, they have been by the consumers, haven't they? Because they've put their money where their mouth is and people have been buying property.
Well, as I said, how do these people get their traction in the media? That's up to those that are responsible for the stories that are published, and surely their credibility is at stake as well by picking out what are clearly boy cried wolf type scenarios. And in the end, we know what happened in that fairy tale, and completely ignored, and the wolf gobbled him up and he disappeared.
Interesting way to finish our chat. So in summary, national house prices have continued to record strong results over November and likely to give us a good December as well. So the year's going to finish off well. Look forward to catching up with you each week for our weekly Property Insider chat as well. Thanks, Andrew.
Thanks very much, Michael.